Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute coming to you ahead of the Fed. But first, can you do us a favor and do yourself a favor? Subscribe to us on YouTube. Click the link below here if you are watching us from YouTube, or go to our YouTube channel and please subscribe. You'll get our videos, my midday market minute, the stuff that my partners Oliver and Phil put out. You'll get notified immediately, because remember, if you are a client, we do send them out via email, but sometimes there is a lag, and this way you get notified as soon as a video gets posted. Okay, it's Fed Day, and we are seeing the S&P continue to battle at 4620. This is such a big level. It's holding so far, and I think we'll find a move, maybe not significant move, but at least a decent sized move in either direction here after the Fed. Do we close out above, say, 4630, a really decisive kind of break and try and push through that trend line? We still have to see it on a weekly basis. Or do we get something back below 4600? I've talked about this trend line from March that's rising as well. We broke through that in the quadruple witching September, and it's now the underside of that is resistance, and that's aligning too with the 4620, 4627 area. So you got a lot of resistance up here in the S&P, and the Nasdaq, round number 16,000 right there overhead too. It looks like the Nasdaq's going positive. The Russell 2000 is pulling back just a tiny bit from its surge. It was up about 2% early. Some of these meme stocks are really running, and you know what? That's one thing that makes us a little cautious too, as you get all these meme stocks really start moving. It's almost like the dash for trash a bit, and seeing cryptocurrencies as well make a nice run. And I've been talking about it. I love cryptocurrencies, but I think this is the time where you want to take a little bit of caution, and whether it's the stocks, whether it's in commodities or cryptos, and see what the Fed does here today, because they talked about it in the Morning Express. Do they acknowledge inflation? And remember, back in the June meeting, they acknowledged inflation at a higher rate than they had expected previously, and that sort of kiboshed that wave. And I think what we could see is the Fed really needs to acknowledge this inflation, and they could put to rest this wave of inflation. So then it sort of marinates and digests a bit in the market, and then we would see a new wave, I think, in a month or two or three. But how does the Fed address what is likely not transitory anymore? That's what's going to be important. So keep an eye and an ear to the ground if they talk about transitory. So looking at crude oil too, moving on, that's been a big driver of inflation, and you're seeing crude oil come in from the highs quite a bit. It did trade against $85 earlier in the week, and now we're back to the bottom side of the range and testing 81. This is major three-star support. So as crude oil comes in, it does start to put to rest the inflation narrative just a bit. Now, if the Fed were to address inflation at a higher rate than they initially expected, I would think we have crude oil come in more sharply. So one of the things, again, taking caution here, we want to position for the next wave of inflation. And I think with crude oil, you want to be slowly looking to build a position, going even out as far out as June of 2022, where that market's trading at, say, $74, and you have this big backwardation of $7 to $8 that's been. And if you see the front month come in pretty sharply of $8 to $10, I'm not saying that's going to happen, but if it does, $8 to $10, then maybe we only see the June down $4, and it gives you a nice place to build a position into $70 June crude. So keep an eye on that. Now, what's going on here today? EIA data. You have a bigger build than expected on crude oil, and then you had some draws in gasoline, but that big build in crude oil confirms that a little bit of a bearish report. You had refinery utilization picked up 1.2%, and it still didn't correlate to a drawdown more in crude and a build in gasoline. You also had Cushing draw a little bit, but it wasn't an excessive draw. So I think it continues to support crude oil coming in a bit here ahead of OPEC Plus. But again, a lot of support at $80.70 to $81 that we're battling at right now. Does it close below there? So keep an eye on that as we digest today through settlement in the Fed. And then gold and silver. We talked about this going back to last week. Gold and silver running into a tremendous amount of resistance, and they've come in a bit, and that's not a surprise. We've expected this. We've talked about trading this to the downside. Silver broke below a trend line yesterday. Gold is facing big support, rare major 4-star support, 1742, 1755. So watch this. It's starting to bounce off. 1745 to 1752. It's stopped and kind of turned in front of that here so far this morning. But if the Fed comes in a bit more hawkish or increases their expectations of inflation like they did in June, we could see gold break through that and retest the recent lows down near 1700, 1670. It could be in the cards. So again, a lot riding on today's Fed. Give us a call. Our trade desk is here. Give us a call after the Fed today. And remember, hit our YouTube, and please subscribe to our YouTube if you get all of our video updates right away. But contact our trade desk if you have any questions, 312-278-0500. And remember, futures trading involves substantial risk of loss and is not suitable for all investors.